Selling agents. If your seller's home is secured by a government-backed mortgage, you may have an incredible bargaining chip and marketing tool when selling their property. What I'm talking about is the ability for a buyer to assume the existing loan on that house. How is that beneficial? Well, since interest rates have risen quite a bit over the past year, that could give buyers an opportunity to take over the existing loan on the house at the low rates that we saw in 2020 and 2021. So instead of a buyer getting their own new loan at a 6 or 7% interest rate, they could very well assume the existing loan on the house, which may only be at a 2.5 or 3% rate. That's a huge monthly savings on their payment. Assumability really only applies to government-backed loans, so FHA, VA, USDA. Even with mandatory mortgage insurance on an FHA type loan, it could make a lot of sense for an otherwise conventional buyer to assume that loan, because even with the mortgage insurance, they're still going to be paying a lot less per month than they would on a 7% conventional loan. It almost sounds too good to be true, so what's the catch? Well, the loan has to be assumed as is, so you can't add anything on to whatever the current balance is. So for example, if the sellers need $400,000 to sell their house and they only owe $300,000 on their mortgage, the new buyers taking over that $300,000 loan, they're going to have to make up that $100,000 gap. Oh, by the way, it's important to know that whoever assumes a loan has to qualify for that loan. That means meeting agency guidelines as it relates to credit, income, assets, etc., etc. And there are some additional caveats that people need to be aware of as it relates to VA financing. Did you know that a non-veteran can assume a VA loan? It's true. The only rub there is that it's going to tie up that veteran's VA entitlement when they go to use their VA loan benefits in the future. So if a VA borrower allows for a non-VA buyer to assume their loan, their entitlement is going to continue to be used until that new buyer pays off the loan in full or refinances. This could impact that veteran's ability to qualify for 100% financing in the future, and even worse, if that buyer defaults or forecloses on that VA loan, then the original veteran is going to be penalized for that. Now, if a VA seller is allowing for a qualified veteran to assume their loan, then you can have the entitlement transferred over into the buyer's name alone. And that will release the seller from any future sins of the buyer, as well as freeing up their own entitlement for future purchases. In a lot of cases, the buyer is not going to have enough cash to make up that gap between the purchase price and the loan amount. So in some cases, they may be able to take out a second lien or a home equity line of credit to bridge that gap. In a lot of cases, you cannot do that, but in some cases you can. That's going to be a question for the mortgage servicer handling that assumption. Since no new loan is being created in this case, everything goes through the existing loan servicer, and half the time the most challenging part of completing a loan assumption is getting somebody on the phone over at the servicer who actually knows how the process works. Loan assumptions benefit sellers because it gives them an additional tool to market and negotiate the sale of their home. It obviously benefits buyers because it allows for them to get into a home with a much lower monthly payment than if they would have taken on a new mortgage at prevailing market rates. And it's a great way to set the listing agent apart because it really shows that they're able to think outside the box and do something unique to market and sell their clients' houses. Really, the only people who are at a disadvantage here are mortgage loan officers because, again, no new loan is being created, so any loan officer that might have been otherwise associated with that transaction is not getting a deal and not getting a commission check from it. And that's okay. This is the one trick that mortgage lenders hate because they don't make any money off of it. But hey, I'm putting it out there because it's not about me. It's about you, the client, and what's best for your buyers and sellers. This is not my expertise. I'm not a loan servicer, but I do know enough to make me dangerous. So if you have any questions about loan assumptions or how they work, feel free to reach out. I'd be happy to help the best I can.